What's my retirement savings plan? Oil, baby. Oil. Sprinkler pipe. Diane!
The one thing that everybody should know about NADA, the Academy, is that it is a lot of work, but it is 100% worth it. Every exercise that you do is eye-opening. You end up realizing things that you never thought to look at. It's actually very well thought out and calculated.
For me, the NADA Academy was eye-opening. To grasp everything about the business. I have a very good feel for the sales side of it, but I don't have that with parts, service, and body shop. So for me, going to the Academy was just to actually learn the whole business in itself.
So we have a 6-week program. It runs over 11 months. It really starts off with a great foundation with financial management. So how do you look at your dealer? How do you evaluate your dealer from a financial statement point of view? And it does a real quick dive into each department, the metrics that we're going to look for and evaluate on the financial statement. It's also an introduction to our composite tool. So they learn how to use that tool, which we use in our 20 groups as well. Week 2 is Fixed Operations 1, Parts Department.
People were dying and dreading and agonizing through parts. I was invigorated by that. We've had challenges. We went back and implemented some more changes. I was very enlightened by and enjoyed that session also.
Week 3 is our service module, talking about everybody from the technician, service manager, advisors. We see more potential for huge growth in a dealership becoming more fixed absorbed.
And then it goes to Variable Operations 1 and Variable Operations 2, so pre-owned and new sales.
At Manheim, Dallas, at 10:35.
So the used car portion of the Academy is truly my passion. That was my first job. It was just so great being there for those 5 days where each day I felt like I was reliving and revisiting a portion of my career, where as you move up the ranks, you kind of forget the little nuances.
We wrap the course up with a fantastic leadership program. So now that they can take not only the metrics that they've learned throughout the program, but how they're going to apply it, how they're going to get their teams to buy in, and how to communicate that effectively as a leader. One thing our curriculum offers is camaraderie.
That one's taken.
By being with the same individuals over these 11 months, the friendships that they form and the bonds do carry with them for a lifetime. They've developed these professional relationships with people they can rely on throughout their career to help them overcome challenges, obstacles, or just everyday life in the dealership.
We weren't an us a year ago, and now we are. So to us.
A lot of times it's, here's what we learned from another person in the class. Gosh, I was talking to Dustin, he's got a Subaru dealership in Utah, and this is what they're doing that's working. It's great that we have those connections, and that'll be there forever.
Good morning again, everyone. Welcome back to NADA Live Stage. I'm Jared Allen with NADA. It is my pleasure this morning to get our press conferences started on this great Saturday morning. So we've got a number of important and exciting announcements related to the auto industry and franchise dealers. We're going to kick things off with Patrick Manzi, NADA Chief Economist, and Jonathan Banks, the Vice President of Vehicle Valuations and Analytics at J.D. Power, to do an economic forecast for us. So I'll turn it over to Patrick and Jonathan.
All right. Good morning, everyone. Welcome to the 2020 NADA show. I know I've had a great time over the past few days speaking with everybody in the industry. There's a lot to learn here, a lot to see, a lot of interesting products and services out there for our dealers. I'd like to start off really with just a discussion of new light vehicle sales in 2019 and our vehicle sales forecast going forward. So we hit 17.1 million units in 2019, the fifth straight year of over 17 million units sold. So, a really solid year there. If you had asked me last year around this time, I was expecting us to come in under 17 million. But then around the second half of the year, we got 3 interest rate cuts, and this helped some consumers on the margin afford that new vehicle payment that they might not otherwise have been able to afford. We also saw a big push in fleet sales from the manufacturers, and this was mainly due, the pickup in fleet was at least partially due, to the new tax laws, which provided for favorable depreciation rules if you buy a light truck or an SUV for your business. So those two things really helped us get boosted over 17.1 million units. Going forward, I'm expecting sales of 16.8 million units for 2020. Beyond that, kind of the mid 16 million unit range over the next few years. So, a lot of, vehicle sales down slightly, but still a very solid and respectable market. Within vehicle sales, though, in 2019, the main hottest segment was crossovers, representing over 40% of all new vehicles sold. This is a very red-hot segment right now. There's a lot of competition there. I expect this year we're going to see a lot of incentive spend in that segment because unless you have the newest, hottest product, you might need to put a little money on the hood to help you out there. EV penetration picked up a couple tenths of a percentage point to 1.4% of the total market. I don't, there's a lot of new entrants coming on to the stage this year, but I think it's going to take a little longer before we see, kind of mass adoption of these EVs. Used vehicles have also been a big opportunity in the dealership. After we've had steady leasing penetration around 30% for the past few years, there have been a lot of fresh off-lease vehicles returning to dealer lots. We're expecting over 4 million to return next year, so there's going to be a steady supply coming back in. Of those off-lease vehicles, I'm expecting a significant chunk of them are going to be certified pre-owned vehicles. We've seen a lot of growth in the certified pre-owned space. Consumers like this. They get a bit of a discount on a nearly new vehicle and also have the added peace of mind of a new vehicle warranty. We're expecting roughly 2.8 million CPO vehicles to be sold. And I mentioned the off-lease. Our franchise dealers get first pick of these off-lease vehicles so they can really select what they want for their own markets. So moving into the dealership, though, let's see. I'm expecting total sales in the average dealership to top $62 million. This is up around $800,000 or $900,000 from last year. And when you add that all up across the entire dealer body, I'm expecting sales to top $1 trillion for the third straight year. And just to put that big number into perspective, that'd be roughly 19 to 20% of all retail sales out there. Within the dealership, though, in the new vehicle department at least, we're continuing to see pressures on the front end of new vehicle sales, with a lot of dealers selling at a loss sometimes in order to hit those manufacturer incentive targets. And when that income comes in, it's recorded as other income, and that other income is really a significant chunk of the profitability in the new vehicle department and in the overall dealership. But other bright spots within the dealership, despite slowing new vehicle volumes, the used vehicle department is doing very well. We're kind of used vehicle volumes are up there, and dealers really like these used vehicles. They tend to be a little more profitable compared to a new vehicle. And then, F&I has been very positive as well. The F&I sales help drive customer retention and business into the service and parts department, which is also expected to grow to over $7 million in the average dealership and roughly $120 billion when you add up all the light vehicle dealers across the country. Going forward, I think the big opportunities in the dealership are this fixed op business and the used vehicle business. There's 278 million vehicles on the road right now. So, people who say Electric vehicles are really going to hurt the dealer business. I just don't see it. There's a whole lot of vehicles out there for dealers to service, and connected cars, I think, are going to help also drive more business into that area of the dealership. So, we've talked about what's going on out there. We talked about the forecast. Prices have continued to rise on the new and used vehicle side. Right now, as of November 2019, our data is showing an average transaction price right around $37,000, just below it. And on the used vehicle side, the average transaction price is just above $21,000. Most of this price creep recently has been consumer demand driven. That is, consumers are selecting these crossovers and they're adding on all-wheel drive, they're adding on the advanced safety features and more luxurious trims, and that can easily add a couple $1,000s to the price. The used vehicle side as well, it's the same, except these vehicles are just 3 years old, they're coming off lease, and they can represent a significant discount relative to this new vehicle. And I think when you take a look at it, when you take a look at monthly payments for these new and used vehicles, I think a lot of customers are going to be paying attention to the payment gap. It's around $160, according to our friends over here at J.D. Power, between new and used right now. So I think a lot of people, they may walk into the dealership thinking you're going to buy this new vehicle, you're ready to go, but you find out you can save $160 a month. I think that's going to speak to a lot of people and may siphon off a couple people into the used vehicle market, even if they could afford that new one as well. But if you got to have a new one, leasing still represents a good value compared to a new vehicle loan. I think you can save around $112 if you do a lease relative to a new vehicle loan. And again, I do expect leasing is going to remain popular going forward. Out there in the broader economy, GDP growth, we just got the final numbers. It looks like 2019 is coming in at 2.3%. It's pretty clear that this, the stimulating effects from the new tax laws have dissipated. And when you look at growth in Q4, you can see strong consumer spending there again. Consumer spending has been a big driver of growth, but there's weakness in business investment. And this is surrounding, the trade policy, the trade disputes going on out there. But there's some good news. We just got, USMCA signed. We have a phase 1 trade deal with China. So I'm optimistic that hopefully we can resolve some of these issues, move forward, and get business confidence back up there to get out there and spend this money. The labor market looks great. We added roughly 175,000 jobs a month. I expect that number to fall slightly in 2020, maybe around 165,000 jobs a month, mainly because the labor pool is shrinking. For the past 2 years, there have been more job openings out there than there are unemployed workers. So it really is a workers' market out there. You can really go out there and pick where you want to work. There's and all of this strength in the labor market has really driven up consumer confidence. Consumers are seeing steady wage gains, this tight labor market, and I think this high level of consumer confidence, which I believe is pretty close to our post-recession high, it means that consumers are going to be willing to go out there and make these large asset purchases, houses and vehicles. Beyond that, other interesting things out there. The millennial generation recently surpassed Generation X to be the second largest car buying cohort out there, rapidly closing in on baby boomers to be the largest car buying cohort out there. I think this really can put the nail in the coffin in the idea that millennials don't want to buy cars. And as we go forward, we're going to see more and more millennials buying vehicles as they enter their peak earning years. They get married, start families, and move to the suburbs. They're going to need a vehicle going forward. Millennials, we've been saying this for a long time, aren't really different than previous generations. They were just hit hard by the recession. And so a lot of these issues have taken time, or the main issue is it's just taken a little longer for millennials to get to this point in their life compared to previous generations. Beyond that, for the highlights for the rest of the year, I'm expecting low and stable interest rates. Right now, the Fed is signaling that we're likely not going to see a rate increase from where we are right now. They're going to be paying very close attention to the data out there, and there could be a chance that we see one more rate cut this year. But when you're at this low of an interest rate, there are some fears of a recession. I just want to make it clear I'm not really seeing anything like that right now. But you have to weigh this. Do we cut rates and then we only have, 150 basis points left should a recession come, or do we go steady as she goes? So I think the Fed's really going to be, weighing those two key things when they're looking at setting interest rates going forward. The labor market's going to continue to be great. There's a lot of opportunity in used and a lot of opportunity for our dealers in the service and parts business. And I'm looking forward to another great year in 2020. Thank you very much.
Great. Good morning, everyone. Thanks for being here. So my name's Jonathan Banks, and I cover the used market. And we're looking at the used market now as really a golden age of opportunity for dealers. The used market has really been a catalyst of growth really since the recession. And we saw a real emphasis for franchise dealers of really revolutionizing the way we sell used cars. And now we're seeing a lot of innovative approaches from other types of solutions to sell used vehicles. And when I talk about it as being a golden age, it really is, because now we're coming into a point where demand is at an all-time high for used cars, and a lot of that has to do with Patrick was talking about affordability. When you look at that payment gap between new and used, it's right around $200 between a new vehicle and a used vehicle. And when you think about the actual cost of a new and used vehicle, you're talking about like a 33 to 40% discount for a used vehicle versus a new. And when you add in the fact that we have such high quality vehicles and vehicles with so much technology, all the way from the top all the way down to the bottom, you have a really good inventory of used cars to sell the consumers as a real good substitute for new. And as Patrick was saying, you have this influx now of younger buyers coming into the market that are looking for a new vehicle, but that new vehicle doesn't necessarily have to be a new vehicle. It could be a used vehicle as well. And we saw the used market really ride that wave up as we started to get above 17 million new. We had used vehicles also rising and prices rising too for the last 2 years. So the fact that we've been seeing this kind of momentum, upward momentum in the used market while we have a strong new market, it's really different, and kind of tells me that as we look forward, where we see the normal cyclical movement of the new market, where we know we're going to probably dip below 17 million, I think Patrick is about in line with the other estimates of 16.8, we think we'll probably be looking at for the new market. So as that kind of dips down, you start thinking about, if you're a franchise dealer out there, there's even more opportunity for used vehicles, because now you're going to have a little bit of pressure from lower new vehicle sales. Plus, you look at margins. And when you look at the margins between new and used, the margins for used vehicles are obviously really strong compared to oftentimes really having really tight margins on the new vehicle side. So the one thing, looking back to 2019, the other really surprising thing about the used market that's a lot different maybe intuitively that you would think is the car segments have really outperformed the SUVs as far as year-over-year price movement. And a lot of that has to do with the fact that supply is going down for cars. I mean, you're not seeing cars built anymore, so it's really driven by what's being produced. And we all know that there's a shift in production from the manufacturers to cars and trucks and SUVs, as it should be. But what that's done now is it's tightened the used supply. So now we have a really tight supply of cars, so mid-sized cars, compact cars, and like all your Accords and Camrys and Civics and Corollas. So what we're finding, though, is the demand for those cars as used is going up from the affordability fact. So we've seen car prices go up upwards of, they're reaching maybe 5 to 7% year over year from 18 to 19. So cars are pretty strong. Then when you align that and start looking at 2020 and 2021, so that the used supply now keeps moving more in line with new, right? So there was a disconnect between used supply and new demand, where there were more cars in the used market and less trucks than what people demanded. Now, as we move into 2020, 2021, 2022, that used supply for trucks and SUVs is going to be in line with that new vehicle demand, which is great opportunity for you all dealers to sell trucks and SUVs. But guess what? You're going to have tighter supply now on the cars. And guess what? You have a bunch of Gen Z buyers coming in that have a ton of student debt, and probably the affordability issue is going to be a factor, and you have less cars to sell. So you're going to gonna really, when you go out to buy your cars wholesale, you're probably gonna be paying more than what you did this year. But the good news is that you'll have demand for it. But what we're really getting at is make sure, if you're a dealer, that you have the right inventory mix and you're aligned with that kind of consumer pool that's going to be coming in. The idea too that Patrick was saying, I think the whole idea that Gen Z buyers are going to go to subscription-based, which by the way, every survey says that subscription people that actually want to not own a car and go to subscription, like just Uber and rent and whatever, it's about less than 10%, according to most surveys. So that phenomenon maybe will happen down the road, but it's not going to happen in the next, say, 3 to 5 years. I don't think we're going to run into that problem. So you have all these buyers that are coming in, and when we look at PIN data on what the younger buyers are actually purchasing, 60% of the Gen Z buyers are actually buying used. So if you're a dealer out there, are you seeing that you're getting a lot of younger buyers buying used? Because we're seeing that in our data. So, and the other thing, that younger buyers, so the Gen Z buyers are buying more cars. So, as you keep getting this influx of younger buyers, they're going to buy cars. They get older, because now you look at millennials, it's about 50-50 car-truck mix, which before, millennials were buying more cars. So it's just that natural affordability thing, but we're going to have a wave of consumers that are going to get demand a pretty broad portfolio in the used market. The other thing to really think about is we had these really long-standing seasonal trends of how used prices would perform. In March, prices would go up quite a bit. In April, they kind of would stay at that high level. And then the summer, you'd see prices sort of drop about 2% per month. And then you get into the fourth quarter, and they drop quite a bit as the new introduction of the new models come out. There's suppressed demand. What we've seen in the last 2 years, though, is used car prices just kind of cruise through the year at a really elevated level. So they peak up in March, and a lot of that we always think has something to do with the tax refunds. So a lot of people getting money to go buy a car. But and then it would taper down in the summer. We've seen prices just cruise at that really high level all the way through the summer and then drop off in the fourth quarter. What that means for you, if you're buying inventory, don't count on waiting for those prices to drop in the summer, as you maybe historically have, but you've seen in the last 2 years. More importantly, I would even don't count on these seasonal patterns to continue, because when you think about the seasonal patterns before, we didn't have these kind of demand implications that are happening now. Now you have all these new entrants coming in, which like the Carvanas of the world, and the CarMaxes of the world, who are now like getting into the consumer space with Edmunds. I don't know what is happening there, but what I do know is happening there is there's going to be a lot more pressure from other areas that are competing with your used business. So you really have to step up that competition, and most likely part of that is going to be buying the right vehicles, and you're going to be at a pretty elevated level when you're buying your used inventory. So the idea is really when we're looking at, what do you do about the future? Well, you want to capitalize on it, because we think that 2020 is probably going to be the best year for the used car market. The supply, as I said, it's going down a little bit from what we had in 2019, but the mix is much better, so more opportunity to make more profit. We think demand is going to continue to be really high. You have that pullback a little bit from the new retail sales. So really, we think the used market, 2020, probably going to be the best year that we've ever seen, but you have all these new competitive forces coming in that have a ton of money to invest. I don't know if you all have looked at Carvana's stock price and their market cap value, but it's absolutely ridiculous for a company that's selling 200,000 units. But think about all that money they have now to invest and compete with you. And then you look at CarMax, same type of situation. When you have these type of competitors with this type of money, you know they're going to up the game. So, and what we really see as one of the really short-term things that you can do, and J.D. Power's kind of, I'll do a slight little pitch, but every one of your solutions that you're working with, your data providers, we're getting to the point now where we're done with the days of just looking at data and kind of looking backwards. It's like old school reporting. It's not really helpful. I mean, it's helpful. You get an idea. Oh yeah, I'm going to go buy my car. I'll look at, the NADA J.D. power value, and my Altima SE is going to be 14,000, and I go in and I'm going to bid around that, and KBB's this and Black Book's that. Well, we want to get to the point now where you're looking at that VIN, and you know exactly what's on that VIN, and you know how well you sell for that Altima SE with this package or that package, and start to get into really precision buying, understanding your demand for your dealership, the demand for the area around your dealership, and kind of be able to step out of the box a little bit and like, yeah, I'm used to selling Tahoes, but maybe I can actually sell some mid-sized cars. I haven't tried it, but my market maybe demand for those cars would be there. So it's really about capitalizing on opportunities that are known and capitalizing on opportunities that maybe are unknown. But the fact is, it's going to be all about used. So really leverage the used market, leverage that demand coming in. Appreciate too that your customer is going to be younger, and appreciate that younger customer. 87% of customers do what they call extensive research online, and part of that extensive research is pricing. Pricing is always the number one thing that people are looking at. And I read a Car Guru survey that says 71% of customers actually come into your dealership because of price. So your pricing that's externally facing on the internet where they're doing that extensive research is super important. And you don't want to have a pricing strategy that merely is like being at the bottom, and we go back to that race to the bottom type of thing. You want to price to where you can price the vehicle where you know that you could sell it quickly and make a product. So pricing strategy is going to be huge to draw in those younger buyers who are doing that extensive research, who, by the way, only visit 2 dealerships. So you get that shot really mainly online from the research they're doing before, but when you get them in, they're yours because they're not going to shop around. So you have them. So that's really the script for me. Just enjoy the year. I hope everyone has a great one. Enjoy all the great product that everyone's been building, and really enjoy the momentum that we've had. And let's just pray that that the coronavirus is not going to create any problems for us. And let's hope that the economy keeps clipping along. And I hope everyone has a great year. And thanks for being here.
My mic's on, so I will not yell. We've got time for questions if there are any for either Patrick or Jonathan.
And I have, welcome everyone. Thank you, by the way, everyone. So I have a mic. We're all just one big happy family here. If you have any questions at all, obviously this is an excellent panel to ask. So I can come over and bring it over. Anyone coming right over to this gentleman. He's breaking it open for us. What's your name, my friend?
Rupert Saunders, hi from the UK.
Good to have you. Welcome.
I'm just interested, I appreciate it's a long-term investment decision, but do you see any switch in the new market back into cars, or has the new market gone all the way to trucks and SUVs?
Question.
Thank you. If we were to see a recession and people don't want to spend all this money for the CUVs, yeah, I could see people flocking back then. But as long as times are good, no, I don't. I see most people sticking with the SUVs and the pickups.
And why do you think the appeal is? What is the mass appeal for this trend? What is it? Is it the practicality? Is it the mixed use? What's the deal?
I think it is the mixed use and the practicality, the ride height. I will drive around in a Miata sometimes, and I'm dwarfed by everything on the road around me. And a lot of people want that feeling of security that you get when you're in this elevated vehicle. You just have more metal around you, the peace of mind. You feel better about putting your kids in something like that. But it's also the practicality too. You can just fit a lot of stuff in them. And I think a lot of people, when they're spending this much money on an asset like that, you really want it to be able to do a lot of things. And a traditional small car just might not be able to do that for people these days.
Yeah, and with the affordability of fuel, right? So those options are wide open right now. Okay, who was it? Oh, this gentleman right here. Hey, what's your name?
Ben Freeland.
Nice to have
question on used vehicle market. Do you see the trend in gross margin holding steady, or has it been going down and getting compressed with this extensive research and these competitors coming online?
Well,
thank you.
The one thing that's happened that's really different, if you think about just supply and demand, and you expect that margins get compressed as demand increases because your supply is fixed. But what's happened that's really cool is that the way the internet has been able to really align almost a buyer to a car, that's kind of unheard of before. Like as a dealer before, you had to buy a bunch of stuff, right? So, you know, you really didn't really, I mean, I don't even know how they did it. The used car managers had to, you know, in their brain remember like what sells, what doesn't sell. So anyway, long story short is if you have better data, you're able to buy the right, maybe not exactly the right mix of vehicles, but approximately the right mix of vehicles, and kind of know what your margin is going to be, even have an understanding of how quickly you can turn the vehicle. So it's really helped keep the margins pretty strong and steady in the used market. That being said, you know, when you have a fixed used supply and you have all these new players coming in, ultimately, you're probably going to be dealing with prices that are going to be higher on the wholesale side. So to me, that's where franchise dealers, you guys all need to get creative. 41% of your buyers, according to data, says that they bring in a trade-in. Guess what? Carvana can't get that trade-in. CarMax can't get that trade-in. Get that trade-in. So that, to me, helps, too, with the margins. Because, well, that's the other thing, too. You know, if there's someone that has an instant cash offer here, I'm going to apologize. But the instant cash offer out there is a joke. I mean, I look at when I look at you know, the instant cash offer for my vehicle, and granted I'm in the industry, so I'm going to do a little bit of research, but they want to give me wholesale value or even lower for my trade-in. And I go, wait a minute, I go to Auto Trader now, and there's like a 30% difference between what you're offering me and what the dealer's selling. Okay, I get it, I want the dealer to get a margin, but 30%, are you kidding me? So I think, you know, and when you think about the extensive research that consumers are doing before they're buying their car, and trade-in, by the way, is one of the top things that people research, you want to have a trade-in value that's sort of aligned with what it's selling for on the retail and what's selling to on the wholesale. And back to the idea of the margin, you know what your margin is at that point, and it's probably pretty solid. It's probably not 30%, but you can maintain it at a pretty high level if you really capitalize on trade-ins.
Great question. All right, anyone else? I'm looking for hands over here. Anyone? I'll come right on. Ladies, you have any questions over here? How you doing all right? Anyone over here? Anyone here? Let me ask this while you guys are coming up with a few more questions. So what was the number? I think it was 1.4% EV. Was that the projection there?
That was 2019.
2019. So I guess I want to ask a general question about, because I would consider myself to be in that segment a bit. Do we have a segment of buyers that are kind of sitting on the fence and not investing in a vehicle because they don't know if they want to go EV yet or if they want to go with a traditional combustion engine, and they're kind of waiting? Is there a little kind of undiscovered market there? Because I feel like a lot of people I talk to are sort of sitting in that, trying to make the decision of, do I buy now or do I wait 3 years when the technology's ready?
You know, there could be some people out there like that. Yeah, exactly.
Yeah.
You want to be the first adopter. You don't want to buy this vehicle, and you know there's always the risk that it doesn't have a very high resale value.
Right.
You would want to go trade it for that one you're talking about coming down the pipeline in 3 years. But I think a lot of it has to do, you know, there are going to be some new EVs coming out that are more in line with the other preferences, right? Like they're crossovers.
Yeah.
They're going to have the all-wheel drive. They're going to be a little more luxurious. They're cool, right? So I think as there's more options out there, it may lure some people out. But what we're also seeing is there are people who have been hybrid buyers and plug-in hybrid buyers, and maybe they've even bought an EV, but they're kind of bouncing back and forth between these alternative fuel segments. So there's just a certain portion of the market that just wants a green car, right? And so they may be enticed to, maybe they bought an early EV, but now the hybrid or the plug-in hybrid that's available is a little, bit better of an option. We're going to see some plug-in hybrids coming out with, 300 horsepower, 40 miles of EV range, and it's a crossover. That's going to tick a lot of boxes for a lot of people. I know me personally, commuting in the DC region, I think a lot of people could commute solely on that EV range. And you get free charging at work sometimes. So I think at least in the short term, people may be scared. I don't want to commit to this vehicle because I can't drive it to grandma's house that's 500 miles away at Christmas. But like a plug-in hybrid might be a nice stepping stone. And once they get used to the charging infrastructure, used to charging that vehicle every day, I think they could just say, well, I'm going to go all in and go full EV for my next one.
Yeah,
There you go.
I think Tesla's proven out that you could do it at volume, and we haven't seen, I think, really super compelling products at an affordable price yet from the mainstream manufacturers. But I think when we get out, unfortunately, we have a couple years to wait. But I think when we get out in 2021, 2022, we're going to see some really high volume, really nice products from some of the mainstream manufacturers that I think, in my opinion, are going to move the needle quite a bit. Because right now, the offerings they're pretty expensive.
They are.
They aren't really aligned with what people actually are buying, which is trucks and SUVs, right? And the gas prices are so low. Now, granted, sitting here today, and Patrick, you probably agree with me, it doesn't look like gas prices are going anywhere but flat. So it really needs to be more, well, the government is going to force EVs on us a little bit. And if you look at Europe as the indicator, we're going to be facing the same type of situation. And at some point, we probably should. But to me, the product is really going to be what's going to move the needle. And Tesla's proven that if you build the product, people buy electric vehicles. And I've seen some products 2 and 3 years out that look really good from the mainstream manufacturers that I think are going to kind of change that whole paradigm.
Oh, yeah. We got electric Hummer coming. We got all kind of stuff coming with the Rivian.
Really,
a lot of cool stuff.
Good point.
Let me ask you this from the used perspective, which you're so obviously entrenched in. What's the resale like when you get into EVs, all that kind of stuff? Does it retain value? Is it tougher to sell? How does that go?
Yeah, it's another indicator of the customer's perception of reliability. Reliability is one of the main drivers that keeps resale values up. Now, Tesla's at like kind of a normal level. With luxury, they retain somewhere between 50 to 55% after 3 years. But the other EVs, like actually Panamera is all right too. But if you look at like the BMW electrics and mainstream electrics, they're about 30% of their original value after 3 years. So atrociously low. And I think low, unfairly low, because they haven't really proven out to be less reliable than a normal gas engine, if you think about at least a 10-year history. Yeah. So there's no demand yet on the used side, and that's why you have the new vehicle incentives from tax, rebates, and you can lease the new vehicle, so you're not taking on that risk. So we haven't quite got to the point where consumers' perception of quality for EVs is aligned with the actual quality of EVs. So the used market is going to be pretty tough for a little while.
Excellent. Well, good to know. Good. Coming right over to you, ma'am. Here we go. Happy to have you guys. If you have any questions, let us know. I'll come right over to you guys. Hey, what's your name?
Ellen.
Hey, Ellen. Welcome.
Hi. I just want to ask you about Tesla. If you look at the market valuation, it dwarfs any U.S. automaker combined. So despite the small market for EV, why so much demand for Tesla, at least from a Wall Street perspective?
Good question. Is this because they're cool?
I wish I knew the answer to that. It's very high. That's all I could say about it.
Yeah, I mean, cool. I look at Carvana the same way. Not to be mean to Carvana because their market cap's so high. It's high because they're looking. You're looking at digital retailing as being the future. They have a really snazzy, site with the 360 imaging, and it's like the future of auto retailing, even though they're barely selling anything and they're not that much more progressive than other traditional sites. But so it's kind of the same idea with Tesla. You look forward, they're actually the only high volume electric vehicle manufacturer, even though they're not making much money. And then you have the whole battery infrastructure that they're developing and the infrastructure for charging. I have an electric vehicle myself, and it pisses me off because Tesla's got these superchargers everywhere, and I got to drive around for miles to try to find the charger, and my car's ready to run out of charge on the side of the road. And if I had a Tesla, I'm golden because they have an infrastructure. I think that infrastructure is going to play for them. I think that was really forward thinking of them, but as far as the valuation goes, I mean, I was joking around yesterday about the volatility of so one thing we look at in used car prices, there's a lot of stability in like truck and SUVs, but when you get to the premium segment, I'm getting to a point here, but you get to premium cars and they're like all over the place. It's like you get into a stock like Tesla where you're being really, you're kind of betting on things changing. You better like hold on to your hat, because I mean it went from what 300 to 900 in the span of what 3 weeks, and now it's down to 800. And look, what did any of you all invest in Bitcoin? How'd you feel about that? If you held on to it. So you never know. So they have some foundational stuff that's good. Obviously, it's not going to be a Bitcoin thing where it goes to nothing, but well, I think it's back now, but. It's one of those things where it's kind of a forward-looking thing, but we don't really even know the future of EV, and the share of EVs is not going to be substantial even in the next 5 years, all things considered in North America. So.
And some of that's just infrastructure concerns as well, right?
Absolutely.
In general. I mean, I'm an off-road enthusiast. It's like, where am I going to get a charge out in the backcountry?
Yeah, exactly. Yeah, you can't. That Hummer is cool, but
cool.
you're going to have to
mall
stay.
Crawling,
you're going to have to stay. And hopefully they get the adapter so you could use those Tesla stations, right?
Exactly.
Maybe a gas generator in the truck bed.
Yeah, right.
Charge it up.
That's right.
That's the deal. Any questions out there? I'm looking for hands. Anyone out there? Any questions? I have one final one. If no one else has anything, anyone else out there? Closing up, and then I'll hand it over to Jared. So I'll just ask you this. I guess my last question is this: so you were talking about kind of the differences between Gen Z and millennial approaches as far as the economy. One of the interesting things you mentioned is how so much of that millennial perspective, and it's something I never really processed a lot, is based on the fact that they were really coming of age around the economic crisis. So it really kind of set them in a different path. So now that we're moving on and we're thinking about Gen Z, the even younger generation, what are we? It seems like they're more open to vehicles than millennials were. It's kind of what it sounds like. How does that focus continue? Is there any way to kind of approach that market in a unique way?
So you kind of hitting on there may be a stronger preference in Gen Z versus millennial. I haven't found that to be the case. I am a millennial. All my peers who went through the recession, even at their brokest points, coming out of college with all this debt, I didn't know anybody who didn't want a car. I grew up in a rural area out in West Virginia, and unless you had a car, you were just kind of stuck. You couldn't get around. So I don't really see any big differences here. I think they both want these vehicles. It's just you get to a certain stage in your life when it becomes more feasible. And when you're younger, maybe you can just get around with Uber and Lyft. If you're on a college campus, you don't need to drive a whole lot. Maybe you have all your food and everything there, and I think that's what Gen Z would be right now. So you can get by just using rideshare around your small area. But the moment you're out there working, you need a vehicle in most cases, unless you're in a very dense urban area. So I actually think that the preferences are pretty similar between generations.
So opportunity abounds, you say.
Yeah, and a lot of the buyer surveys suggest that they still will want cars. And remember, they're not going through the same, like Gen Z, they're not even going to remember the recession. They're looking at, for those parents that have kids, your Gen Z guys, they've been enjoying good economic times, so they're going to come out of it with a lot different perspective, I think, when they come in full force in the market with a lot more positive attitude. I'm wondering if there is going to be a reaction in their actual preferences compared to millennials, because if you think about cyclical consumer preference trends, going back in time forever, there's always a reaction to the prior generation, and we didn't quite see that, I think, with the millennial buyers, because they came, well, we did a little bit with subscription-based type of buying, like they were kind of the first ones that kind of grew up in that, which sort of makes sense from an affordability standpoint. But I'm thinking that Gen Z buyers are going to come into their own in good economic times if they continue, and they may react against, us. I have a daughter, she's 15, and she's going, what are you doing? There's not gonna be any animals left for me to look at. And, I'm exaggerating, but, there's always sometimes a reaction to the prior generation. And that's why I think maybe we might be being a little short-sighted on cars. Hey, we backed out of cars another time, and what happened with that one? You know, if you go back to the 80s, did that work out for the United States manufacturers? I kind of think not. So, you know, there might be a reaction. We haven't seen it yet, but who knows? There might be a change in preferences, but I think their buying power is going to be substantially different and looked at substantially different than what we did with the Gen X buyers who came up through a really, really rough times.
Awesome. Thank you, guys. Oh, here we go. Come right over this, gentleman. How you doing? What's your name, sir?
Spencer Young.
Hey, welcome.
Autonomous, if you could address that, and then potential disruptor of China and their manufacturing, their overproduction, and when are they coming, and any other disruptors you see that we need to be mindful of in the next 5 years?
So autonomous, China, disruption.
So autonomous, you know, you got your two things. You got your advanced safety features, your adaptive cruise, all that stuff. That's going to be on all new cars very shortly. But, you know, a robo-taxi, you know, you get in the car and go to sleep, and it takes you wherever you want to go. That's a long way away. You know, I was actually just talking, you know, with a colleague who's sitting out here about a ride in a Lyft last night, and he said it took them a lot longer to get where they were going because the autonomous vehicle was reacting a lot differently than a human driver would. So it's still early stages for that, you know, get in and I don't have to think style driving. I think that's, you know, a decade out, probably longer than that. You know, that's what we're hearing.
Yeah, and on the used side, those features are actually adding a lot of value to your used product. So that those safety aspects of those features are actually pretty good. And when we look at the premiums that they're getting on the used side, they're actually quite good, both, you know, on what people are paying on the retail side. So, and we've seen, I can't think of the stat off my head, but the ADS features, maybe anyway, I think they're maybe 60% compared to like low 10% on the vehicles where it has been available. So anyway, you're going to see more cars in the used market with these features, and there is an opportunity for you to make money on them because consumers now are paying a premium for it. So actually, pretty good thing. But I'm with Patrick. I think as far as it disrupting and moving buyers out, I think we have a ways to go.
All right, excellent, guys. I wish we could continue, and we could probably even go even further into some of your questions, but the segment, I'm definitely time to turn it back over to Mr. Jared Allen. Why don't you give everyone a round of applause, first of all, and take it away, Jared.
Thank you, Madison. Madison, did you get a job at Automotive News last night?
I wish, man. I got a job as a professional drinker last night, unfortunately. I'm trying to quit the job.
It is Vegas.
Yes.
Thank you. We're going to stick with our economic trend this morning. But we're going to take a quick pause right now. We'll be back in about 4 minutes on stage, and we're going to have a brief conversation about dealership employment trends, which is another hot topic and obviously an area of concern for all of our dealer members. And then we're going to have Patrick up here again. I hope you like Patrick, by the way. You're going to get a lot of Patrick Manzi this morning.
More Patrick.
And we're going to have another conversation about the state of the auto industry with Patrick and Jonathan Smoke, the Cox Automotive Chief Economist. So we'll be right back in about 3 minutes. Patrick, Jonathan, thank you.
Thanks, everyone.
Thank you.